balance, a stronger Canadian dollar means a little less inflation than we would otherwise see here at home, and it means that loonie goes farther when we're traveling abroad.
Welcome back to the Midweek Exchange. I'm Natalie Nanowski, and as always, I'm joined by Brett House, Scotiabank's VP and Deputy Chief Economist. He's here to break down those big economic issues that you face in your daily life and explain how they could affect you. Hi, Brett. How are you doing today?
Good day, Natalie. Welcome to spring.
Welcome to spring. And I am not the only one that has a spring in my step. We're also seeing that in the loonie right now. After months of it being pretty stagnant during the pandemic, it's now starting to move upward. What's going on there?
Well, you're right to point to a bit of movement recently in the value of the loonie against other major currencies. And it's useful to think of the exchange rate as a bit of a lens or window on the health of an economy overall against its peers. And with the loonie moving up in value against other major currencies like the Japanese yen and the euro, it's a sign that capital is flowing into the country and that our economy is starting to pick up and do relatively better than some other major countries' economic activity.
So, right now, it seems that the Canadian dollar is keeping up with the US dollar. Can you explain what's happening there?
Well, that's a real achievement because in a time of crisis such as the one we're in now, the US dollar is a safe haven that attracts capital flows and normally sees an appreciation. So we would expect the Canadian dollar to actually lose some ground against the greenback, but in this case, it's keeping pace with it because oil prices, which are one of our major exports, and the expectation that the Bank of Canada will raise interest rates a few more times than the Fed will mean that dollars that come into Canada can earn a little more than they might south of the border. Now, the Canadian dollar is doing much better against the yen and the euro because we're not expecting nearly as much monetary policy tightening there and higher interest rates. And so capital that goes into those regions is not likely to fare as well as it is here in North America.
Okay, so what does a strong Canadian dollar mean for consumers?
Well, inflation is the top concern for most Canadians right now, and a stronger Canadian dollar generally provides a little dampening on those price pressures. Any goods that we import from abroad become marginally cheaper or increase in price less than they otherwise would have. But the impact on the overall inflation rate is going to be small because right now, as restrictions come down, Canadians are pivoting from spending on goods to make their homes nicer or to improve their remote offices. And they're moving to spend on things like restaurant meals, uh, concerts, and entertainment out. And so we're likely to see a lot of price pressures over the next few months coming from services and not goods. But on balance, a stronger Canadian dollar means a little less inflation than we would otherwise see here at home. And it means that loonie goes farther when we're traveling abroad.
Some good news there for sure. And how about the week ahead? What should we be looking out for?
Well, we're going to get a couple data points that are going to look very confusing when we see the headlines. We'll get the CFIB, the Canadian Federation of Independent Businesses, barometer reading in March on the how small businesses are faring. And that's going to show a big improvement as we come away from the Omicron related restrictions that we had in place in January and continued strong hiring and very tight labor markets. At the same time, we're going to be getting January GDP numbers that are probably going to look a bit disappointing. And that will reflect those Omicron restrictions that led to people staying home and not spending as much as they otherwise would have. We should really discount those GDP numbers because they're not a good indicator of how the Canadian economy is doing. We already know from the February labor market data we've received that Canada's rebound is continuing ahead strongly.
All right. Thanks so much, Brett.
Great to speak with you.